the USOIL spot. Now, on the USOIL spot so far this week, we've done phenomenally well. As you will see, we have been buying this asset since the week began, making us scoop over 500 pips in profit on this particular asset. Now, for those of you who missed out on our earlier session and for educational purposes, let's run through what really happened at the beginning of the week and what led to the decisions that made us to buy this asset. Now, the first thing we observed at the beginning of the week was how price action was confined within the $76.50 level and the $75.87 area to emphasize the prevailing uncertainty in the market at that particular point in time. And usually, whenever we have a range like this, we exercise patience waiting for price action to either break out of the resistance line for buying opportunities or break down the support line for selling opportunities. Now, there's one thing we observed here on Monday while trying to decipher where price is likely going to break out of. We saw that price action spent most of the first 8 hours of the week around the support line of that range at the $75.87 area, and we begin to notice how sellers were finding it difficult to settle below that support line. And looking at the structure closely, we begin to notice the appearance and emergence of hammer candles, which technically reveals that buyers are present in the market. And this happened for about 3 hours. Look at, we saw the second one here and we saw the third one around here to further emphasize that buyers may likely be taking over the market. Now, with this situation here, we did not wait for price to break out of the resistance line of the range at the $76.50 level. Instead, we positioned ourselves right at the $76.20 area to capitalize on our first buy position for the week. Then we kept on adding more positions at the breakout of the $76.50 level. We also added more at the breakout of the $77 area, which of course on Tuesday we got taken out of all the buy positions where we moved our stop losses to with over 200 or 300 pips in profits on that one. Then right here on Tuesday we begin to notice the appearance of buying pressure again. So we said if this continues, we will be adding more position at the breakout of the $77.32. We also had it at the breakout of the $77.75 area. So it was a very, very profitable week for us all. At least the first half of the week, we were able to scoop in close to 400 pips, or over 400 pips on this one. Now, during our live session yesterday, remember what we did here. We identified an ascending trend line, which we said we will be using to guide our trading decision. And of course, you see how this ascending trend line has supported the bullish buyers since Monday's trading session. And we agreed that as long as price remains above the ascending trend line, we shall continue to buy this asset. Now, we were at this crucial juncture during our live session yesterday where we did analyze and said we will be joining that uptrend move at the breakout of the $77.75 level, and then we also added one more at the breakout of the $78.50 area. And look at what we had here. The first buy position moved over 150 pips, while the second one moved over 76 pips. And of course, if you had moved your stop losses accordingly, like we always do in this community, when price moves very well in our favor, you must have been taken out with a considerable amount of profit on that one. So once again, well done and kudos to you guys. So at this point in time, you shouldn't be in any position right now. So going into the last trading day of the month of February, and of course Thursday's New York session, how do we intend to capitalize on the next move? How are we going to continue buying this asset, or are there chances that sellers could come in anytime today? Now, following the takeout of yesterday's buy position, price action has since consolidated along the ascending trend line we identified earlier. Look at this beautiful consolidation phase here, just exactly around that ascending trend line we spotted yesterday, further emphasizing how crucial this juncture is for us. So a lot of things is going on right now that is affecting this whole situation. One of these factors is the Federal Reserve decision to postpone rate cuts, coupled with the escalation of US oil stocks, which of course exerted additional pressure on this asset, taking us out of all the buy positions from yesterday. Now, the American Petroleum Institute API, remember we talked about this yesterday, reported a significant increase in US crude oil stocks, rising from 7.168 million to 8.428 million barrels for the previous week. Similarly, yesterday the EIA crude oil stockpile reported a higher than anticipated figure with a rise of 4.199 million barrels compared to the previous week 3.514 million barrels. Now, this for me is a sign that supply is higher than demand. The demand was unable to eat into the supply, hereby giving us a rise in stockpile. And whenever we have a rise in stockpile, it shows that the commodity is surplus in the market. And when this happens, our simple economy says that price will likely drop. Now, will price drop to the downside following this this significant increase in stockpile, or are we going to see the trend continuation happen? Now, if you look at the structure, you will see that the ascending trend line we identified yesterday has finally been broken to the downside. Now, the question as we head into today's trading session is this breakdown a true and valid breakdown or a false one? Usually, if it's a breakdown, true breakdown, we expect price to come back, retest the structure, and continue the downward momentum. And in fact, I already had a sell position triggered here. I'm currently running in a loss. But if you are here to take advantage of that opportunity, well, let's place a sell stop order below the $77.75 area to continue the downtrend if ever price does a retest of this ascending trend line. So that is one scenario we are looking at. And of course, if we consider the Fed's officials' emphasis on delaying interest rate cuts, this development may raise concerns regarding economic growth and subsequent oil demand. Now, if interest rate remains high for an extended period of time, it simply means that the dollar will become expensive for other currency assets to buy. And considering the fact that the US oil is a US denominated commodity, it becomes expensive for investors and market participants to buy, and which may result in a low demand. And when there is low demand, what happens? Because of price is high, there will be low demand, and when there is low demand, price definitely will drop. So how is the market going to react to this current market dynamics that we have right now? Is it going to react positively in favor of the US oil, or are we going to be seeing price nosedive to the downside today, being a result of profit-taking activities as market participants take off some of their positions of the market? Now, today, market participants will be closely monitoring the US core personal consumption expenditure index, which of course is an inflationary gauge for insight and potential trading opportunities. Now, if it is higher, then it shows that interest rate is likely going to be higher, which will further support a bearish bias. So the identified levels here is going to be our guide for today. As you will see, our center of focus for today's trading session will be between the $78.50 level and the $77.75 area, where depending on the direction of the breakout will give us an idea into where price is likely going. So if price action can go ahead to break out the $78.50 level, then price is back above the ascending trend line, giving us beautiful opportunities to buy, and then we could add more buy positions to our existing trade if price action take out the highest point for this week at the $79.25 level. So that is how we are going to be managing a bullish bias on this asset today. So let's mark out these levels and be on standby to capitalize on this opportunity. However, if the market comes into the trend line here and retest the structure, and we begin to see continued selling pressure as buyers find it difficult to climb back above the ascending trend line, this will welcome selling opportunities, and we could add more sell positions at the breakdown of levels such as the $77.75 area, as you will see here, and the $77 level, and of course our key level at the $76.50 area, and finally the lowest point for this week at the $75.87 area. So you can see how crucial that ascending trend line is going to be guiding our trading activity for today. So you want to be marking out the trend lines and key levels on your chart, as we will be using them to guide our independent trading decisions. If you have any questions whatsoever, feel free to let me know in the comment section.